Today's Tuesday, November 23rd, 2021, and I'd like to discuss today the JPMorgan and Tesla feud that's going on. JPMorgan's Jamie Dimon and Tesla's Elon Musk feud behind the scenes. Bank's lawsuit against the electric vehicle maker brings the CEO's long-simmering tensions to open. It's plain that Elon Musk and Jamie Dimon don't get along. Mr. Musk has burned Mr. Dimon's JPMorgan Chase for years, turning to other banks while expanding Tesla Inc. and his broader empire. Conversations over the years have been between the two companies have often upset one side or the other, according to people familiar with the situation. Mr. Musk and Dimon have tried to patch things up, but clashed instead. The people said JPMorgan decided some time ago that it is better off without Tesla, according to people familiar with the matter. A small part of the quiet feud, which pits America's most valuable car maker against its biggest bank, spilled into the open last week when JPMorgan sued Tesla. In its lawsuit, JPMorgan said Tesla owes it $162 million from a trade the bank helped arrange in 2014. Typically, bankers seek to avoid public fights with big clients and even potential clients, anxious about winning fees and worried the slightest insult could cost them access. We have provided Tesla multiple opportunities to fulfill its contractual obligations, so it's unfortunate that they have forced the issue into litigation, JPMorgan said last week. If JPMorgan doesn't withdraw their lawsuit, I will give them a one-star review on Yelp, Mr. Musk said in a response to the Wall Street Journal. It is my final warning. Both chief executives are commanding presence inside their companies and industries, and both have had public fights with rivals, or sharp words for critics and regulators, though Mr. Dimon has often wound up expressing regret over what he admits are uncareful slips, while Mr. Musk has rarely backed down. Tesla has captured the market's imagination about the future of electric cars and become one of the first companies valued at more than $1 trillion, making it the kind of client Wall Street fights over. JPMorgan's investment bankers haven't worked on any Tesla offering or transactions since 2016, according to public records. When JPMorgan worked on Tesla's 2010 initial public offering for stock and several capital market transactions in the following years, it was usually ranked behind rivals such as Goldman Sachs Group Inc. and Morgan Stanley. JPMorgan has been paid about $15 million by Tesla for advice in capital markets work in the past decade, while Goldman has made about $90 million, according to DealLogic. Mr. Musk has used Morgan Stanley, Goldman, and Bank of America for personal loans he has pledged his stock holdings against, according to public filings. JPMorgan's Chase's consumer bank is a big auto lender, but it was hesitant to be an early backer of Teslas and other electric vehicles, people familiar with the matter said. Bankers raised concern about the long-term value of electric vehicle batteries. Later, Chase executives approached Mr. Musk about an agreement to make Chase the primary lender to Tesla buyers at dealerships, the people said. The bank has similar deals with Maserati and Jaguar Land Rover. Mr. Musk said no, the people said. The bank recently signed a similar pact with a Tesla rival, the electric truck maker Rivian Automotive Inc. It has also been financing more Teslas recently for its customers, the people said. Last week's lawsuit is likely to increase the tension. Tesla will be represented by Alex Spiro, the lawyer who successfully defended Mr. Musk in a defamation lawsuit. At the heart of the lawsuit are warrants that JP Morgan bought from Tesla as part of a large set of trades that helped set up for the company in 2014. Tesla would have to pay JP Morgan in cash or stock if the stock was trading above the agreed upon price when the warrants expired in 2021. The contract, JP Morgan said, allowed JP Morgan to change that strike price if Tesla announced it was exploring a sale or other transactions, because that would affect the valuation of the warrants. In 2018, Mr. Musk tweeted that he had secured funding to take Tesla private at $420 a share. JP Morgan lowered the strike price and alerted Tesla, according to its lawsuit. When it became apparent there was no deal, JP Morgan moved the strike price higher again, but not all the way back to the original price. Tesla objected, according to the lawsuit, telling JP Morgan that its price adjustments were unreasonably swift and opportunistic. Tesla also told JP Morgan if it was the only bank making such an adjustment, according to the lawsuit. JP Morgan said other banks may have declined to adjust their warrants for business reasons having nothing to do with the contractual terms or the reasonableness of JP Morgan's adjustments. By the time the contract started expiring in June 2021, the stock price had soared and was above both the original and adjusted prices. JP Morgan requested payment and Tesla paid JP Morgan based on the original strike price. It refused to pay the extra amount the adjustments would have required, the bank said. So the saga continues.